Gold climbs to $4,100 neighborhood, eyes weekly high ahead of FOMC minutes. Gold scales higher for the second straight day amid safe haven flows and a softer USD. Reduced Fed rate cut bets act as a tailwind for the buck and cap gains for the commodity. Traders seem reluctant and are now looking to the FOMC minutes for a fresh impetus. Gold, XAU USD, builds on the previous day's recovery from levels just below the $4,000 psychological mark, or a 1.5-week low, and gains positive traction for the second straight day on Wednesday. The momentum lifts the bullion to the top end of its weekly range, with bulls now awaiting a sustained move beyond the $4,100 round figure before positioning for further gains, as the focus remains on FOMC minutes, due later today. Apart from this, the delayed U.S. non-farm payrolls, NFP, report on Thursday would be looked upon for more cues about the U.S. Federal Reserve's Fed rate cut path, which, in turn, will influence the non-yielding gold. In the meantime, concerns about the U.S. economy keep the U.S. dollar, USD, depressed below a one-week high and act as a tailwind for the safe haven precious metal. The fundamental backdrop, however, warrants caution for bulls. Daily digest market movers. Gold remains supported by reviving safe haven demand, modest USD downtick. Ukraine's military on Tuesday said that it had struck military targets inside Russia using US-supplied ATACMS missiles. Amid the ongoing conflict, Ukrainian President Volodymyr Zelensky will travel to Turkey to revive stalled peace talks with Russia. A US Special Envoy, Steve Witkoff, is expected to join the discussions. However, Kremlin spokesman Dmitry Peskov said that no Russian delegates would attend the talks. This keeps geopolitical risks in play and further offers support to the precious metal. The US dollar struggles to attract any meaningful buyers, though it holds steady near a one-week high amid less dovish Federal Reserve expectations. In fact, several Fed officials recently signaled caution on further monetary policy easing next month. Fed Vice Chair Philip Jefferson said earlier this week that the central bank needs to proceed slowly. However, Fed Governor Christopher Waller continued to build the case for further rate cuts amid concerns over the labor market and the slowdown in hiring. The U.S. Labor Department reported that the number of people receiving unemployment benefits after an initial week of aid, a proxy for hiring, increased to 1.957 million during the week ended October 18. This suggests an elevated unemployment rate in October. Hence, the delayed release of the U.S. non-farm payrolls report for September, due on Thursday, will grab all the attention. This, along with the FOMC minutes, due later today, will offer cues about the Fed's rate cut path and influence the USD and the XAU-USD pair. Gold bulls now await sustained strength and acceptance above $4,100 before placing fresh bets. The commodity on Tuesday found decent support and bounced off the 200-period exponential moving average, EMA, on the 4-hour chart. However, mixed oscillators on the said chart warrant caution before positioning for a further appreciating move. Meanwhile, the $4,100 round figure is likely to act as an immediate hurdle, which, if cleared, might trigger a short covering rally and lift the gold price to the $4,152 to $4,155 intermediate hurdle en route to the $4,200 mark. On the flip side, the $4,037 to $4,036 area could protect the immediate downside ahead of the 200-period EMA on the 4-hour chart, currently pegged just ahead of the $4,000 mark. A convincing break below the latter could make the gold price vulnerable to accelerate the fall towards the $3,931 support before eventually dropping to the $3,900 mark en route to the late October swing low, around the $3,886 region.